The Life, Mindset, and Investment Philosophy of Warren Buffett. Introduction: More than just wealth. Good day, everyone. Today, we are not simply studying a billionaire. We are studying a mindset. Warren Buffett is often introduced as one of the richest people in the world, but that description barely scratches the surface. Buffett is not just an investor. He is a strategist, a thinker, and perhaps most importantly, a master of human behavior. Because in the end, investing is not just about numbers, it's about psychology. Buffett's story teaches us something profound. You don't need complexity to succeed, you need clarity. And throughout this lecture, we will not only follow his life, but also understand why he succeeded where so many others failed. Early life, the formation of a financial mind. Warren Buffett was born in 1930 in Omaha, Nebraska, during one of the most difficult economic periods in history, the Great Depression. This detail is not trivial. Growing up in a time when money was scarce shaped his thinking permanently. While other children saw money as something to spend, Buffett saw it as something to multiply. A different kind of childhood. Most children are consumers. Buffett was a producer. He didn't just enjoy Coca-Cola, he bought it wholesale and sold it for profit. He didn't just read newspapers, he delivered them and tracked his earnings like a business. He didn't just play games, he built income systems. The famous pinball machine story is a perfect example. He bought a machine, placed it in a barber shop, collected passive income. At an age when others were learning arithmetic, Buffett was learning capital allocation. Early investment thinking. At age 11, Buffett bought his first stock, and he made a mistake. He sold too early. The stock later rose significantly. This small experience taught him a lesson that would define his entire career. Patience is more powerful than prediction. At age 14, he bought farmland, not to farm, but to generate rental income. This shows something critical. He understood the difference between working for money and having money work for you. Education, the turning point of ideas. Buffett's formal education mattered, but not in the traditional sense. He attended Wharton School, University of Nebraska-Lincoln, Columbia University. But the most important thing he gained was not a degree, it was a philosophy. Benjamin Graham, the intellectual foundation. At Columbia, Buffett studied under Benjamin Graham. This was the single most important influence in his life. Graham taught that stocks are not just symbols, they represent businesses. Markets are often irrational. Opportunities exist when price does not equal value. This idea is revolutionary. Most people try to predict the market. Buffett learned to ignore the market and focus on value. This is where Buffett's early career became critical. He didn't just join the public market, he started his partnership. He followed strict rules. Only invest when there is clear value. Avoid speculation. Think independently. While others reacted emotionally to market swings, Buffett remained calm. This is where most investors fail, not because they lack intelligence, but because they lack emotional control. Buffett's advantage was not IQ, it was temperament. Factory to empire. Buffett's purchase of Berkshire Hathaway is one of the most fascinating parts of his story. Originally, it was a textile company, a declining industry. Buying it was, by Buffett's own admission, a mistake, but what he did next was genius. Strategic reinvention. Instead of sticking to textiles, Buffett transformed Berkshire Hathaway into something entirely different, a capital allocation machine. He used it to acquire strong businesses, invest in profitable companies, reinvest earnings intelligently. This shift changed everything. The power of insurance float. One of Buffett's smartest strategies was using insurance companies. Here's how it works. People pay premiums up front. Claims are paid later. This creates a pool of money called float. Buffett used this float to invest. Essentially, he was investing with money that was not his, cost very little. This created a powerful compounding engine. Investment philosophy, simplicity as power. Buffett's philosophy is often misunderstood as simple, but it is not simple. It is disciplined simplicity. Key ideas. 1. Intrinsic value. What is the business truly worth? 2. Margin of safety. Buy below that value to reduce risk. 3. Long-term thinking. Time is the greatest multiplier. 4. Circle of competence. Stay within what you understand. Time is the greatest multiplier. In today's fast-paced world, Buffett's greatest strength is patience. He does not trade frequently, chase trends, react emotionally. Instead, he waits and waits and waits until the right opportunity appears. This is extremely difficult, but incredibly powerful. Charlie Munger, The Evolution of Thinking. Buffett's partnership with Charlie Munger changed his strategy. Munger introduced a key idea. It's better to buy a great business at a fair price than a fair business at a great price. This shifted Buffett from cheap companies to high-quality companies. This evolution made Berkshire Hathaway even more successful. Wealth, simplicity, and contradiction. Despite becoming one of the richest people in the world, Buffett lives a remarkably simple life. Same house, simple food, minimal luxury. This is not accidental. It reflects his belief that wealth is a tool, not an identity. Philanthropy, redefining success. Buffett's decision to give away most of his wealth is one of the most remarkable aspects of his life. He pledged billions to the Bill and Melinda Gates Foundation and helped launch the Giving Pledge. This shows a deeper philosophy. Success is not just about accumulation, it's about contribution. Deeper lessons from Buffett. Let's go beyond the surface. Lesson 1. Emotional control, greater intelligence. Most people fail because of emotion. Lesson 2. Simplicity wins. Complex strategies often fail. Lesson 3. Time is the ultimate advantage. Compounding works only with patience. Lesson 4. Reputation is everything. Trust takes decades to build and seconds to destroy. Target reflection. Warren Buffett's story is not about becoming rich. It is about becoming wise. In a noisy world, he chose silence. In a fast world, he chose patience. In a complex world, he chose simplicity. And that made all the difference. Don't forget to like and subscribe.